Welcome to Realconomy Brief. Today, we're diving deep into the latest escalation in the US-China trade war and why it's one of the most critical events shaping the global economy. We'll break down the key details and explain what this means for your investments, everyday goods, and the global market. Over the weekend, the US government announced sweeping new tariffs, up to 145% on essential Chinese imports, including technology, electric vehicles, and industrial goods. This move is part of a broader effort to tackle China's trade practices, which the U.S. claims have led to unfair competition and intellectual property theft. In response, China wasted no time retaliating, slapping 125% tariffs on American goods, ranging from agricultural products to electronics. This tit-for-tat trade war is reigniting concerns of a prolonged economic standoff, one that could ripple across the globe as these tariffs continue to mount. The global economy is feeling the impact. The International Monetary Fund, or IMF, has recently downgraded the U.S. growth forecast for 2025 from 2.7% to 1.8%, a significant decline. Meanwhile, global GDP projections have also been revised downward, now expected to grow at just 2.8%. On top of that, shipping volumes between the US and China have plunged by 64%, signaling major disruptions in the supply chain. In the US, consumer confidence has dropped by over 30% since the beginning of the year, as prices rise and economic uncertainty intensifies. So, what does all of this mean for the global economy and for consumers like you? First, rising tariffs are pushing prices up, meaning that the everyday goods you buy are likely to cost more. From groceries to electronics, consumers worldwide may face higher prices as manufacturers pass on the costs of tariffs. Secondly, the stock markets are bracing for more volatility as investor confidence dips and the global economy slows. Business leaders are already holding back on investments, uncertain about what the future holds and worried about shrinking profits. If this trade war continues, it could have far-reaching consequences. We're already seeing slower economic growth, and if the stalemate drags on, we could face a global recession. Many economists are warning that continued tensions could lead to even deeper economic contractions, not just in the US and China, but across the entire global economy. The manufacturing sector, which relies heavily on Chinese suppliers, is already feeling the strain, and companies may be forced to move their operations elsewhere to avoid these tariffs. Thanks for tuning into Realconomy Brief. Be sure to stay updated with us for more insights on the global economy and market trends. Don't forget to subscribe and follow us for daily market analysis and in-depth financial news.